Hey everybody, how y'all doing? So, I've been very busy today. Busy. I sent out a lot of updates. I think I sent out the most updates today that I ever sent out. A lot of stuff. My forecast for the jobs report tomorrow. I sent out some stock recommendations. I sent out updates on the GOP tax package. Very important there. I sent up a very concise write up and encapsulation of my sort of macro outlook. Now, people have been asking me, can you give us the big picture macro outlook? So I decided to write that all down. And this is going out, for the next couple of years. And it will have major impact on all the markets, okay? And there was a bunch of other things that I sent out. Anyway, if you want those updates, all right, just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial, no obligation, to MMT Trader, all right? So let me talk a little bit about, first I want to mention the Trump's pick for the new chair of the Fed, that is Jerome Powell. Jerome Powell is, basically not much of a change from Yellen. Let me put it this way. First of all, the guy's a former investment banker. So right there, he's got the economics wrong, okay? I have never yet in my life, and I've been on Wall Street for 40 years, I have never met an investment banker who understands our financial system, who understands our monetary system. They're not versed in MMT. They don't understand it. He's, as a former Wall Street investment banker, you better believe that this guy is going to be totally taking his signals from the market. So again, we will have and by the way, just if I can throw this in here, it's kind of a letdown to myself and to my subscribers and people who follow me, because we were really hoping for a cowboy like Warsh to get in there, but it's not going to happen. Warsh was a real cowboy, and he had everything. He was like a Schiff. He was like a Peter Schiff, Mark Faber, Jim Rogers guy. Hyperinflation to print the money, all that stuff. So we get Powell. We're going to get Powell. That's a decision. So Powell is going to take his signals from the market. So the market is going to dictate. And I've always used the example, John D. Rockefeller, the monopolist who created the behemoth of Standard Oil in the 19th and early 20th century. If he would have went around to all his little competitors who he crushed out of business and asked them, what price should I set my oil at? So that's the kind of guy he's going to be. He's going to he's going to take feedback from all his buddies on Wall Street. What should the Fed do? So it's not going to be an autonomous Fed, and that kind of makes it easy in one regard, because you could watch the markets and predict, with a guy like him, you could watch the markets and predict what Fed policy is going to be. I think, we can never say these things with absolute certainty. I mean, conditions might end up in such a way that, he has to kind of take command. And that I talk about that in my sort of global macro write-up that I mentioned earlier in the video. If you want that, go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader. So that's number one. We're getting Powell. We're not getting Warsh the cowboy. But for us at MMT Trader, we know what to do. I mean, we follow everything on a daily basis. We're way ahead of everyone. All right. Now, the tax plan. I got to say, this thing looks pretty bullish, man. You got an increase in the deductions, okay? A very significant, I think it's a doubling in the deductions, or nearly a doubling of the deductions. You have a reduction in the tax rate to 12% for families making up to $90,000. You have the child tax credit. You have the corporate tax cut. All these things. Don't forget, right now, the economy is growing at 3% annually. Not bad. It's doing that as a result of historic government spending right now. Yes, we are going to surpass the 2009 stimulus spending year. We are already well on track to surpassing that. I follow these numbers every single day. And then when you throw in the tax cuts, if they get passed, remember, Trump says he wants Congress to pass them by Christmas. That's your Christmas present, he said. Big tax cuts. The economy is going to, this is going to light the economy up, all right? So that has implications. That has implications for everything. It has implications for stocks. It has implications for gold and hard assets. It has implications for the dollar. Okay, it has implications for interest rates. Very important. This is the big macro picture. If you get this right, you put your trades on, you sit back, and you become rich. Okay? That's all you have to do. It's very Reagan-esque in a way, what he's doing right here. That's a little, I guess, hint as to what we can expect. So I have that. I spoke about that. What else? Oil market, good today, strong as I have been calling it. I will tell you this, and I have alerted my subscribers to this, that we are now seeing, as of the February futures contract, starting with the February WTI futures contract, the market has moved into backwardation. We have not seen this for about 3 years. Backwardation means where that month, the February, is now trading higher than the deferred contracts. That is a very important signal that the market is sending. All right, very important signal that the market is sending right there. So you have that. I want to also mention this morning, Bank of England raised their benchmark rate to 50 basis points from 25 basis points. That was the first increase in more than 10 years. I thought the zombies would buy the pound on that. I got a lot of heat from my people because, I teach everybody that higher rates equate to a lower exchange rate. Zombies always get that wrong, but they got it right today. And I was betting with the zombies. I wanted to front run them. So yeah, I bought some pounds and they went down. They went down hard. So I don't think the zombies really understand. And I still think they're going to buy it up. And, one little rate hike does not offset, I think, the larger picture, which is the bearish dollar environment. Okay, the bearish dollar. My view on the dollar has not changed in spite of this recent rally, this 2-month rally that we have seen. I will say it again on record. The dollar is going down. The dollar is going down. And I'm not some perma bear on the dollar. I have given reasons many times, and certainly to my subscribers, I have given reasons. So there you have it, folks. That's a little bit of a summary of today. I sent out a lot of emails, a lot of updates today, a lot of updates today. So you really ought to get that. If you don't have the free trial, get the free trial. I'll send you all these updates. I can't even count them. There were so many, but a lot of information today. And tomorrow is the big number, the October jobs report, and I sent out my forecast. I've been right on the money, every single one except for that last month when the hurricane kind of tripped me up, and I kind of tripped up myself. I did a little bit of a variation on the way I calculate that, so I guess I went off course a little bit, or went off of my my formula, so to speak. But I'm back on it. I'm back on it. All right, so go to pitbulleconomics.com. Sign up for the 30-day free trial. I will send. You need this stuff now. You need it tonight because you can make money tomorrow. All right, everybody? Bye.